Hello viewers, I am Sanjeev Pandya welcoming you to another episode of the Tax Time. Your taxes matter. This weekly show brings you latest updates not only on taxes but the things related to taxes, because eventually you have to pay tax. But when do you have to pay tax? When you're working or when you have your own business. So there are corporate taxes, there are personal taxes. So in this show, as we try to get you as much tax related information along with the changes in tax laws, we're also going to give you a lot of information when it comes to corporate taxes. Now we all know that this land of America is based on entrepreneurs. This country gives so many opportunities for young entrepreneurs to start a business. To start a business is always a great idea, but the question is, how do you choose a right entity? There are several entities, and what entity is right for you and what entity may not be right for you. That is the first thing that you have to take into consideration. So in this episode, we're going to talk about those entities and choosing the right business entity. Once again, I'm joined by Mr. Ajay Kumar, CPA of SAI CPA Services in this show. Sir, welcome to the show.
Thank you, Sanjeevji.
Thank you very much. And am I right? I mean,
Absolutely. It's a big question. It's a great question. A lot of people are concerned. They want to start the business, but they don't know what kind of business they should be starting.
Very true.
And a lot of times people will have the business, but they don't properly form the business. So it's seen as a hobby as opposed to a real business.
Correct.
And we will talk about the hobby income, hobby losses when it comes to starting the business.
Absolutely.
So the government does not allow the hobby losses. If you have a side business that you're trying to grow, but you have not formally incorporated the business, those losses are not going to be allowed. So it's very important to form the business. The key though here is, what kind of business should I be forming?
Exactly. And I think, Ajayji, if I can mention one thing, is that many people are not aware of how many entities are there.
Absolutely.
What they do, it's very easy to go on Google and get the information. But some of the business entities are eventually tied into your personal tax returns. So are you going to benefit on your personal tax return? Are you going to have more tax liability, or are you going to be saving more taxes? That is the most important factor that wannabe business owner should be looking into it.
Absolutely. If you do it right, a lot of business, as much as 80% of the businesses, should help you save money. So IRS allows 5 types of business structure, and 4 of them, 80% of the business type, is actually flow-through entity, is called. Flow-through means the business profit and losses flows through your personal taxes. So at a high level, the 5 type of entities are proprietorship to partnership, LLC, S Corp, and C Corp. The first 4, proprietorship, partnership, LLC, and S Corp, are actually flow-through entities. C Corp is the only entity which is not flow-through, which is also referred as the double taxation entity. So a lot of times you have to be very careful from the liability perspective, from the exposure perspective, from the investment perspective, from the payroll perspective. There are a lot of variables that helps you decide what type of a structure makes more sense for you.
Absolutely, very well said. So now, do you want to pick one entity at a time?
Absolutely.
And then you were mentioning about hobbies and losses. Can you shed a little more light on that, please?
Absolutely. So the way the IRS looks at it, hobby income is taxable, while hobby losses are not deductible.
How can you give an example? What's hobby income?
Absolutely. Say I'm a CPA and I like cooking. So I start a separate business where I cook and I try to sell it.
It's a catering business.
It's a catering business because I love cooking.
Right.
But if I don't form a separate business, if I don't formally start the business, all the investment that I'm making in my cooking business are not tax deductible because it's my hobby, not a business.
Correct.
If I start the business, if I formally incorporate the business, all the investment that I'm making in my cooking business, even though I'm an accountant, I'm a CPA.
Absolutely.
All those expenses, all those investments become tax deductible.
Okay. All right. So that is the one example.
Absolutely.
So that is between hobby versus business. Personal expenses not deductible. Also, I think one of the things into that.
Absolutely. See, the personal expenses are not deductible in any situation. If you have a business, only those expenses are deductible. But a lot of those expenses are kind of gray area expenses. I wouldn't be cooking if I did not have the passion to cook. So it's my business expense. I'm taking cooking classes. All those expenses could be business expenses.
Right.
If I'm trying to grow a separate line, it doesn't have to be cooking.
Correct.
Depending on what your passion is. A lot of people have jobs, and on the side, they try to do what they're good at. If you have an IT job, you're trying to start an IT company. If you are a plumber working for somebody, you have a part-time assignment where on the weekends you go somewhere and do some fixing. But if you formally incorporate your side business, then all the investment, all the expenses related to that business becomes tax deductible.
Absolutely. And the forming a business, it's not that super expensive, if I
It's
understand
very
correctly.
cheap.
Exactly. Now, before we go into the break, I just want to, and before you start talking about each entity separately, I just have one question. There are many people, Ajay, they have a hobby and they want to do something, and they are good, they are exceptionally talented, whatever, cooking or handcraft or anything, but they're afraid to start a business because they think that will bring so much liability, and they're a little bit nervous, they're a little bit afraid. So what happens is that their talent is not really very well explored, meaning people don't get to enjoy that. And I think in this episode, what we should try to do with your expertise and advice is that people who have some kind of ideas, they should really get into business and set up a right entity for them and go into business because it's going to benefit them.
I completely agree. I think there is a mental stigma. There is a mental block. I don't want to have the business. I'm not cut out for the business. But actually, we are all in the business. We are all doing something right. We are all doing something on the side.
Absolutely.
The key here is if you formally incorporate the LLC, the corporation, you are actually limiting your liability. Your liability is less. Your liability is limited. That's why the name LLC, Limited Liability Company. You are limiting your liability to the extent of your investment. Nobody can come behind you, your personal asset. It's better. It's actually less exposure, less liability if you have the business.
Absolutely. Okay, very well said. And we're going to take a break. When we come back after the break, we're going to have actually discussion on each and every single business entity for your knowledge and the reference. That's all coming up. Please don't go anywhere. Welcome back to the second segment of the Tax Time. Your taxes matter. The show brings you all the updates on the taxes and what's good, what's really good. That's about taxes. You know, we don't say nothing bad about taxes. Taxes are really good. Okay, Ajay. So with this second segment, let's start going on each and every single business entity.
Absolutely.
Okay.
So there are 5 types of entities: proprietorship, partnership, LLC, S Corp, and C Corp. The first 2 types of entities, proprietorship and partnership, they do not offer the limited liability protection. The last 3, LLC, S Corp, and C Corp, offers the liability protection. So you have to see what are you concerned about. Is the liability your main concern? Is the cost of administration is your main concern? Are you going to have an employee? In our 5 types of entities, we'll see if the cost is the main concern. If I'm more concerned about the administrative fees, then proprietorship or partnership may make more sense. In most cases, as much as 90% of the companies are formed as LLC or S Corp. In LLC, limited liability company, there is no payroll required. The payroll is required only for the S Corporation and C Corporation. LLC has some self-employment tax liability, and S Corporation has the payroll tax liability. In theory, they are supposed to be very similar, and they are both flow-through entity. So as we were discussing, 90% of the companies are LLC or S Corporation. So we have listed some examples as what kind of businesses will be best suited for what type of structure. So if you have a rental property, in most cases, unless you are a rental professional, unless you are a realtor, it will make most sense for you to have an LLC. On the other hand, if it's a professional corporation, you are a doctor's office, you have an IT company, you're an accountant's office, S Corporation will make more sense because you will have the payroll anyway. And in S Corporation, there is no self-employment taxes. The C Corporation, the 5th structure, it provides you the best liability protection. So if you look at it from the bottom up perspective, proprietorship, partnership, LLC, S Corp, and C Corp. C Corp is on top as far as the liability protection is concerned. So C Corp provides you the highest liability protection.
Bilkul.
And it's the most expensive structure to manage. You have to have the corporate books, you have to have the quarterly meetings, you have to issue the dividend. But this structure provides the best liability. So,
Okay.
for example, if you have an intent to go public,
Ji.
if you are looking for public funding,
Hmm.
then the exposure for lawsuits is very high. In that case, you want to start a C Corp. S Corp is not allowed to go public.
Ji.
Only C Corps can have lot of investors in there.
Okay.
So C Corp becomes the entity of choice when you have public funding involved.
In between C Corp and S Corp, how are they taxed?
So S Corp is considered as a flow-through entity. So when you have the profit from the S Corp, it flows through in your personal tax return. So you don't really pay a separate tax for the S Corporation. While in C Corp, under the new tax reform bill that we were discussing in our last episode, there is a flat tax rate of 21%.
That's it.
So if you make $100, you pay $21 to Uncle Sam, to IRS. And rest of the money, $79. Whatever you take out of the $79, you pay personal tax on that $79.
That $79 is all after taxes and cost of goods sold and
On the net profit.
everything in the net.
You pay 21% taxes
Correct.
on the net profit in the corporation.
in the new corporation.
In the S corporation, if you take the same example, you make $100, you don't pay any tax for the corporation. This $100 get included in your personal tax return.
Correct.
And you pay personal taxes on that $100.
And obviously, you need a very qualified and knowledgeable CPA, I guess, in order for you to decide which is the right entity for you, because they have to look into your personal tax returns, what's your annual income and how many dependents you have and whatnot, and who do you want to do business with. These are the things also.
Absolutely.
Now, for just one simple question comes to my mind is that in our community, some of the businesses are very popular. You will find them, you'll find majority of them are in the same business, such as convenience stores,
Right.
gas stations,
Right.
beauty salons. I see nowadays, many young talented ladies are getting into beauty salon business. So beauty salon business. Then you have liquor store and everything. Is there a certain criteria that, and motels, not to forget, right?
Absolutely.
Is there a certain criteria that if you are going to be in a convenience store business, you need to have a certain entity? If you are going to have a beauty salon, you need to have a certain entity. Is there a certain criteria, or it still depends upon your personal taxes?
Well, there are certain criteria. So by the type of business, we can shortlist that I don't want the proprietorship, I don't want the partnership, I don't want to pay double taxes. So my choices are LLC or S corporation when it comes to the convenience store, when it comes to the restaurant, when it comes to the beauty salon. So I'm best served by having an LLC or an S corporation. The key here is, how do I decide between the two?
Ji.
So I need to look at if I'm going to have the payroll, if I'm going to be working myself in the store, or if I'm going to have employees in the store. Then the next criteria is how much investment I'm thinking. Is it going to be from my pocket, or is it going to be from somebody else?
Absolutely.
If I have the investment coming from somebody else, then I have to be concerned about the legal exposure over there.
Absolutely, yes.
So S corporation provides you slightly higher legal protection. So if you go back to 5 entity, S corp is number 4, C corp is number 5, LLC is number 3. So S corp provides better legal protection, but slightly expensive to manage compared to LLC. So my two options are LLC or S corporation. If you have profitability, then you go with the S corporation.
Ji.
See, a lot of grocery stores,
Yes.
a lot of restaurants need a lot of upfront investment. So I know for the first year, for the first 2 years, I'm not expecting to make money. In that case, I'll start with LLC, and when I know I'll be profitable next year, I can actually convert
Okay.
my LLC to S corporation.
Very well said. Now, the one more question comes to my mind before we go into break. These businesses that I mentioned, and then you said rightfully that it all depends that what kind of your personal tax situation is. Cash method or accrual method, does it make a difference for a person to decide what is the right business entity for them?
It's a great question, Sanjeev ji.
So I tell you what, before you answer that question, let's take a break.
Absolutely.
We'll be right back after this messages. Please stay right there. Welcome back to the third segment of the Tax Time. Your taxes matter. This weekly show, once again, that I I'm saying it, that brings you all the latest update that you need to know on the taxes, and besides taxes, business entities, and there will be a lot more coming your way every week in this show. So please make sure that you make an appointment with us every Saturday 4:30 right here on TV Asia. Ajay ji, my question was to you before the break: cash method, accrual method.
Absolutely.
How important they play a role in deciding the right business entity?
It depends on the type of business.
See.
IRS allows cash method of accounting for businesses that have less than $25 million of revenue, not the net profit, for last 3 years. A lot of small businesses, our retail store, the grocery store, the restaurants, the beauty salon, they're all cash basis, a lot of them.
Ji.
The advantage over there is, in December, you look at your books and you see, oh, I made a lot of money, I don't want to pay a lot of taxes. You stop depositing the checks in your bank account. So you have just reduced the revenue.
Ji.
Oh, I made a lot of profit this year. Why don't you pay your January rent in December?
In advance.
In advance. Why don't you pay the utility bill? Why don't you pay the credit card bill?
They're all can be accrued.
Well, in the cash method.
In the cash method, right.
In the accrual method, you are forced to use the accrual method if your average last 3 years revenues are over $25 million. Then government does not allow the cash method.
Correct.
But in the cash method, there are a lot of room for managing the income. So small businesses are allowed to use the cash method. All our stores, the Indian grocery stores, the
Exactly.
restaurants and the beauty salon, a lot of them, most of them are cash method of accounting.
Okay, interesting. So for accrual, it will be a separate thing.
Yes,
Okay.
absolutely.
Now, before you go any further, the question comes to my mind is, when someone is setting up this business entity, and obviously, as I'm saying, is that CPA's advice and CPA's recommendation is the key thing.
Absolutely.
Is it really important for them to consult an attorney?
Not necessary.
Not
Not in the
necessary.
beginning. Unless you have a partnership,
Okay.
unless you have two independent partners and you need to write the rules of engagement right up front, you don't need an
Okay.
attorney.
And the second question is that S corporation, which has limited liability and everything. Let's say someone sets up S corporation, and the company loses $100,000 in the first year. How much of that $100,000 will be carried forward? When it comes to losses into your personal taxes, and for how many years you can do that?
Well, the best part about the S corporation is that all of this $100,000 becomes deductible against your personal taxes.
But not in the 1 year, right?
Well, you can deduct it if you have enough
That
income.
much of income.
If you have that much of income, you're
Correct.
allowed to deduct 100%.
Very good.
If you don't have 100,000 of income to offset the losses, you can carry forward.
Why? For how long?
You can carry forward forever.
As long
now.
as, achha.
There is no limit on the NOL, net
Yeah.
operating loss carry forward is there forever.
Okay, that's one of the reasons
As long
why.
as until you have the income, you carry forward the losses.
That is one of the reasons why S corporations are quite popular.
Very popular. There are limitations with the S corporation though. So S corporation is a hybrid structure that provides you the benefit of the LLC in terms of limited protection and benefits of corporation. So you have a hands-off approach. I'm not the corporation, I'm the entity here. So S corporation comes with a lot of limitations. You cannot have more than 100 members in the S corporation. The maximum number of investors are 100. So think about it. If you are thinking about crowdfunding, if you are thinking about the public funding, S corporation is not going to work for you. S corporation, all the shareholders must have the green card or the citizenship. If you are a foreigner,
That's a good point, right?
you cannot have the S corporation. You have to be a US resident. So it comes with a lot of limitations, lot of restrictions
Bilkul.
for the S corporation.
Bilkul.
And LLC can be owned by somebody from India.
Okay.
If somebody wants to start a business from India, typically will go with LLC or C corporation in that case.
Very nice. Okay. Anything else left from your side as far as this business entity concerns? I'm sure viewers will have slides in the show that they can see it. But I have one more question,
Please,
and
go
I
ahead.
just want to know if you have anything else to add into this.
No, please go ahead with the question.
All right. Now, if I understand correctly, and if I summarize this at the end of this show, proprietorship and partnership, one category. S corporation, C corporation, and one side, and then LLC, limited liability corporation. These are the 5 of them. Suppose if somebody sets up S corporation or LLC for that matter, and then they realize a year or two after that that was not the right entity that they should have set up. how difficult it is to change from one to another or something, or is it possible?
It is possible in certain cases. So an LLC can be converted into an S corporation, an S corporation can be converted into a C corporation, but you cannot really have a C corporation becoming a proprietorship. So there are certain.
So then you would have to fold the books on C
You have to
corporation.
fold the book. You
and
have to
start
dissolve that
corporation.
company
Right.
officially, formally, and then start the new entity.
Okay, all right. That was the question I had. Anything else?
So we want to show if you have this type of business, what's your entity of choice should be and why it should be. Say, for example, if you have a grocery store or a typical pharmacy, we'll start with either LLC or S corporation, depending on if you are working yourself, how much investment you have, if the investment is your own investment, or if investment is coming from somebody else. Similarly, a typical restaurant will be an LLC or S corporation. Most IT company, professional companies, the doctor's office, the attorney's office, the CPA's office are going to be S corporation or PC, professional corporation, or LLC, depending on how many members are there. If you have multiple CPAs, multiple attorneys, then you can form the LLC as opposed to S corporation. Most real estate companies are going to be LLCs. So if I'm a CPA and I have another property where I have some rent coming in, I will form a separate LLC to collect that rent to limit my exposure to that property, to that LLC. So unless you are a real estate professional, unless you have multiple properties and this is what you do for a living, a corporation wouldn't make sense for you. Most real estate companies are going to be LLCs.
So with that note, we come to an end of this episode. And of course, as I mentioned to viewers, is that you definitely need a CPA, very qualified, knowledgeable CPA. And I'd like to thank Mr. Ajay Kumar, CPA of SAI CPA Services, with over 20 years of experience. And one of his main expertise is guiding people to choosing right business entities. I'd like to thank him. To be part of the show.
Welcome.
So thank you so very much. Next week, are we going to talk about something special?
Yes, next week we want to touch on home-based businesses.
Okay.
We want to touch on if you have a real estate investment business, what are the exposure related to it?
Nice. Interesting.
How much of the mortgage you can claim? How much of the property tax?
That's going to be another interesting show. That'll be coming your way next week right here on TV Asia. I am Sanjeev Pandya, wishing you all happy and a tax-free week ahead. Thank you for watching this Tax Time. Your taxes matter.